How's it going, investors? I'm Ari and welcome to my channel. Now, if you are brand new here, perhaps just stopping by for your very first time, I want to catch you up to speed and sharing with you that I started this channel back in 2019 with a goal of essentially hitting $100,000 with my brokerage account, while also showing you all through how simple investing is as long as you have a process and stick to that process regardless of what's happening in the market. Of course, just after I began this journey, we had the whole 2020 pandemic and so on and so forth. Here we are now, but sticking to that process, not too long ago, my account surged right past $100,000, whereas it's now sitting at $101,763.97. As for today's video, given it's the start of a brand new month, welcome to September, I want to go ahead and break down all of the dividend income that I've received throughout the month of August. That's 7 total dividend paychecks, then jump right into my dividend tracker to just show you through, again, how simple dividend investing, value investing, and just investing in general really is with that process. Just before we get going, tap on that thumbs up button. It helps me grow this channel. And of course, if you haven't already joined me on this journey, go ahead and do so now by simply tapping on that subscribe button. Now, YouTube, let's dive right in. So before I actually get started, I want to go ahead and share with all of you that I'm not one to sit right here and share with you what stock paid me out, how much they paid me, because that's not fun for anybody, nor does it actually provide any real value for you. So what I'm going to be doing is essentially sharing with you what company paid me out in a dividend, breaking down the company, going into some insights and forecasts of whether or not I think it's a buy, whether I'm going to be buying into it, and of course want all of you walking away with investment ideas. So let's go ahead and rewind back to August 1st, where I had 2 dividend paychecks come in, the first of which came in from AT&T, ticker symbol T. I'm sure you're all very familiar with it, the world's largest telecommunications company and the 3rd largest provider of mobile phone services. Now, AT&T was once a beloved dividend investor favorite, but that was before the big Warner Media and Discovery merger announcement, as well as the announcement of that dividend cut. Now, while many saw both of those moves as detrimental to the company, I was and remain actually a huge fan of both of those decisions. You see, divesting the entertainment assets it spent billions to acquire under previous leadership now allows for the telecom leader to literally just refocus on what they do best, which is telecommunications. And of course, during the last few years with store closures and loads of debt, the dividend being cut will eventually put AT&T in a better position down the road. Now, AT&T has been experiencing growth since the decisions, especially when it comes to postpaid phone subscribers, the telecom industry's most valuable customer segment. Now, these customer gains propelled AT&T's second quarter mobile phone revenue to $19.9 billion. That's a 5.2% increase over the prior year, and the company's 2022 revenue is now outpacing years prior. However, AT&T is still down on the year by roughly 4%, trading at $17.50. Their PE ratio is at 6.5. That is, of course, in the ballpark, but less than Verizon. And according to analysts, AT&T is likely to see some growth coming in at a target share price of $22.85. Now, personally, I'm not so sure that I'm going to be focused on nor buying more shares of AT&T at this point in time, but rather holding tight and just collecting on that dividend. I received $3.54 for the 12 shares that I do own from their dividend yield that's coming in at 6.46%. Now, as for that second dividend paycheck that also came in on the 1st of the month, it came in from Darden Restaurants, that's ticker symbol DRI. While everyone gets all jazzed up about the McDonald's and the Chipotle's out there, which, don't get me wrong, are phenomenal investments, at least in my opinion, Darden is often overlooked, and unfortunately, because it quite literally can cost you. Now, Darden Restaurants was founded back in 1968 and has grown into a multi-brand restaurant operator with restaurants like Olive Garden, Longhorn Steakhouse, Eddie V's, and the Capitol Grill all underneath its operational belt. Now, all in, they have 8 brands with over 1,850 restaurants across America, making Darden one of the 50 largest private employers within the United States. Of course, more recently, with inflation eating away at the consumer's dollar and penny pinchers out there given high inflation, Darden has been feeling the heat, and their stock is down on the year by roughly 13%, trading for around $125 per share. Their PE ratio is coming in at 16.7, and while insiders have been selling shares, hedge funds have been doing the exact opposite, doubling down on the position. As for analysts, they foresee a rebound in the stock share price coming up to $141.06 per share. At this point in time, I would definitely say that Darden Restaurants is worth to add to your watch list. Now, as for my dividend paycheck that came in, I currently own 5 total shares worth of Darden. I got $6.32 from them, so that dividend yield of theirs is at 3.65%, so I very well may be adding more shares worth of Darden restaurants. Now, jumping to the 11th of the month, we had the world's most valuable company, that's Apple, AAPL, their ticker. They sent me a dividend paycheck. Now, I know I don't really need to go too deep into the rationale here, but it's worth sharing that Apple is just one of those stocks that when it does in fact go down, you should definitely be looking into it. And of course, smart money is doing the exact same thing, pulling the trigger on the tech titan, whether it's Warren Buffett or some of those hedge funds buying in hand over fist like Ray Dalio's at Bridgewater Associates. Now, Apple has some pretty big products coming down the pipeline here, like the VR headset due to come out in 2023, or the Apple Car, which I believe is certainly going to compete with Tesla and may be the only formidable force to take on Tesla itself. As for the stock, it is currently still down on the year by roughly 13%, trading for around $157 per share, and it may even come down some more as long as interest rates continue to rise. Now, I'm going to be buying more shares of Apple to increase my position with the company and making it around 20% worth of my portfolio. However, at this time, I hold 112 shares that allowed me to receive $25.85 in a dividend, with their current dividend yield at 0.56%. A few days thereafter, on the 15th of the month, it is the big real estate payday in which 2 monthly paying real estate investment trusts sent me dividend paychecks. Now, the first paycheck came in from Stag Industrial, that's ticker symbol STAG, which is a smaller of the 2 positions, but I'm working on slowly growing it given I foresee explosive growth moving into the future upon an economic recovery and the advancement into our e-commerce future. And with that said, Stag Industrial, it was founded back in 2010 with a focus on single-tenant industrial properties, primarily warehouses, with clients ranging from the run-of-the-mill logistics companies to FedEx and Amazon. All in, Stag Industrial has 551 properties spanning across 40 states and is continuously growing. Now, year over year, despite its promising potential, the stock hasn't seen too much momentum here and remains down on this year by 32%, trading for around $30 per share. However, hedge funds have been scoring more shares worth of the position, and as for analysts, they do foresee upside potential coming up to $40.63 per share. As for my cut, for being a shareholder with 29 shares, I received $3.58 in the form of a dividend, with their current dividend yield at 4.65%. As for that second REIT, it is one that I would recommend for anyone and everyone interested in REITs. We have Realty Income, ticker symbol O, which is a bit more of an established REIT as it was founded back in 1969 and has since flourished into an industry leader when it comes to net lease solutions. Now, it's the largest of its kind, and it focuses on single-tenant commercial properties. It has properties across all 50 states, even expanding well outside the United States into Puerto Rico, the United Kingdom, and Spain. Now, the Realty Income portfolio comprises of over 11,000 properties, which is almost unmatched within the industry. The stock itself is currently trading for $68.45. Not exactly an undervalued share price, but I would say Realty Income is worth the add to your watch list the moment that it goes on sale. Now, analysts are forecasting a stock share price of $76.43 per share, and until it reaches those heights, we can just kick back and collect on the dividends. Now, I personally own 102 total shares. I received $25.51 in the form of a dividend, given their dividend yield is sitting at 4.27%. And as for my last dividend paycheck from an actual holding within my portfolio, considering the other came in from simply keeping cash in a settlement fund, I had a paycheck come in from one of the world's most beloved coffeehouse chains, Starbucks, ticker symbol SBUX, which doesn't need much of a breakdown in my opinion, but is worth noting its sheer size on a global scale with 34,000 plus locations operating in 80 countries. Now, Starbucks has a market capitalization coming in at $98 billion. So despite the economic backdrop and the recent negative news around all the unionizing, it is definitely worth an investor's consideration, especially as its share price is down around 25% in the year, trading for around $85 per share. Its PE ratio is at 23.6, which could be lower, but we'll take it as its competitors are trading at much higher evaluations. Not to mention, hedge funds have been doubling down on this coffeehouse giant, scoring over 6 million shares just over the last quarter, and a ton of recent investments from a multitude of firms. Now, analysts do foresee upside potential here with their stock share price coming up to $93.47 per share. As for the paycheck that came in, I own 20 total shares worth of Starbucks, so I received $9.87. Given their dividend yield is at 2.3%. Now, investors Go ahead and get that drum roll going for the monthly total coming in at $93.80 for doing absolutely nothing, which is exactly why I love being a dividend investor. And if we jump into the dividend tracker, we can see that we not only more than doubled last year's August income, but we officially surpassed last year's total by $33.80, and better yet, working our way to averaging $100 in passive income per month. So there you have it. That's August's dividend income. Now, just before we get going, I would certainly love to know how much you personally brought in this past month and which dividend stocks you have your eyes on as we move into the month of September. Now, drop all those comments down below, and most importantly is tapping on that thumbs up button to help me grow this channel. If you haven't already subscribed, go ahead and make your way over to doing so as well by simply tapping on that subscribe button. Now, investors, until the next video, I will see you all there.